This is the Scrap Metal and Commodities Recycling Report brought to you by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, January 18, 2016. In this report, last week copper prices hit almost 7-year lows, steel prices remain near multi-year lows, oil hit new 12-year lows, and despite government interventions around the world, global growth continues to slow. Looking at the bottom left of this chart, steel production was up in the last reporting week and was the highest it's been in many months, but it remains at very low levels. Oil prices hit new 12-year lows last week and this morning. They could continue down due to about 36 hours ago, decades-old sanctions against Iran were lifted, so within months, Iranian oil will begin to flow freely to global markets. Low oil prices remain having a devastating effect on the amount of steel used in U.S. oil drilling rigs, as U.S. oil drilling count hit yet new multi-year lows and is less than a third of what it was about 14 months ago. Despite this, scrap steel prices have actually come up a bit, but remain near their multi-year lows. The higher prices are due to at very low prices, scrap steel was not coming into yards at a high enough rate to meet demand. Somewhat related, stainless steel scrap prices have come up a bit and stayed a bit higher than they have been, but they too are near multi-year lows. With global weakness in manufacturing and copper production remaining high, copper prices hit almost new 7-year lows last week. And this 5-year chart shows copper prices have been declining for more than 5 years. Freeport-McMoRan, one of the largest copper miners in the world, had their stock price hit new multi-year lows last week. Their stock price is now about 1/10 of what it was in 2008. China's total imports of all goods remain below last year, but there was a spike up in December. Due to very low copper prices, China stocked up on copper in December, so December copper imports were 15% higher than November and were the second highest in history. This December spike could be the reason for the multi-year low copper prices now, due to high copper inventory levels within China. This 6-month aluminum price chart shows prices have somewhat stabilized, and the 5-year chart shows aluminum prices actually remain very close to their multi-year lows. This 5-year aluminum inventory chart shows aluminum inventories at LME warehouses are falling, which could mean prices could stabilize or rise. But there is word that non-reported inventories have actually been dramatically increasing in Asia, which could mean stable or lower prices to come, not higher. Looking at this about 35-year chart showing imports to China, we understand the many recent reports that global trade, U.S. rail traffic, and U.S. truck freight shipments are all down. This would mean commodity prices could stay low for many months to come. The stock price of the largest recycler in the world, Sims Metal Management, had their stock hit new 15-year lows this week. This is an example of the recycling industry being under enormous pressure. On a positive, consumer confidence in the United States remains near, actually, multi-year highs. And the multi-year collapse in commodity prices continue to have a major positive effect on manufacturers and consumers. But looking carefully at this graph, it shows that for decades, consumer confidence has been coming down, which frankly is a concern for long-term economic growth. But on another positive, Iran will now start consuming steel for drilling, and their 80 million people will soon increase consumption of everything from cars to appliances. This will help parts of the global economy. With that, we hope all have a safe and profitable week. My name is Greg Brown.